Hi guys, Ken Chigbo, aka KenFX Freak, back with another week roundup and look ahead on behalf of the BluFX team. So guys, before I get onto the charts, last week was very much about this dollar weakness, and these moves were phenomenal. Incredible amount of dollar weakness. And look, a couple of reasons to note. One, it was largely attributed to month-end flows. So a number of our contacts on the investment bank side of things, Citigroup, JP Morgan, their month-end models, which are typically quite accurate from experience, were demonstrating at the commence of this week, of last week rather, that it's very much skewed towards dollar weakness in terms of this month end. So remember, month end is, it's not just, if you look at speculative FX, there's real FX flows that are going on. So regarding month end, we've got these big institutions, these pension funds, these fund managers, so on and so forth, that will need to balance their books. So it may require them to, exchange dollars to another currency, so selling of dollars and then buying of other currencies to balance their portfolios. So that was one of the reasons. And then the other attributed to, at the start of the week, on Monday, with this huge surge of risk appetite, the riskier FX, AUD, NZD, CAD, Euro, GBP, etc., everything apart from dollar was outperforming the greenback because we had these global statistics which were really showing a massive slowdown in obviously the cases of coronavirus. Good for risk appetite. And the second point is with that being said, with all this easing of government lockdowns, there is, despite that, there's a really low chance at the moment of a second wave of coronavirus, which is great news. Great news and good for risk appetite. So let's take a look at the charts now. I just want to show you the Dixie, obviously the dollar index. I had marked up obviously this sort of narrowing triangular structure in which the price was ranging. You could say ranging down to sort of 98. 98.50 up to a high of around sort of 101. So it's quite a tight range, and sort of the tightest of ranges that we've seen for quite some time, at least until this period, this period here, the back end of 2019. And look, I had this sort of descending channel, but also had a triangular structure there, a secondary trend line, and both of which we're clearly just breaking out of the range anyway for the dollar. And I just want to show you the monthly. The monthly is still the first loss that we've actually experienced this side of the year. We hadn't had a monthly loss since December 2019. And you can just see just the way the consecutive selling was seen. We had this nice morning star formation and some consecutive selling for that week for the dollar. With that being said, it's making a lot of upside now for the euro. We sort of challenging this high area here at the back end of March. Given this 111 region as just looking left of the chart, we can see, it can be used as a decent platform to go and extend at least into sort of the 112 territory, maybe more. This week, we've got the ECB rate decision now. They're expected to expand their stimulus program. Typically, when we're pumping more money into the markets, seen as dovish, more negative for a currency. But right now, where these European nations within the bloc are very much reliant right now, because time's delicate, on this stimulus, if the ECB underdelivers, that could be seen as a euro negative. So expecting some further potential upside there if the ECB deliver. Just going to take a look at GJ. One thing I just wanted to notify you with, GBP in general pushed higher on the risk appetite, benefiting on that. But there's still a Brexit stalemate, which could start to take its toll on the pound towards the end of June. Okay, but right now, we had this double bottom. We pointed this out to our members, which we've been enjoying. It's one bottom, two bottom. Neckline up at around this sort of 135.30 area. But again, with a lack of need for a safe haven, i.e. yen, GBP has room to further extend to the upside. I did mark up this sort of bearish potential flag or wedge structure, but given this breakout of this sort of upper part of this range here, 1, 2, 3, this session here around this mid 132 region, given that breakout of that range, you'd expect that to just carry through to the upside. Like in AUD, we've got the RBA rate decision this week. Not expecting them to be any more dovish. Actually expecting them to be maybe a little bit less dovish, more optimistic on the economy. Data's been improving. Australia is one of the better nations at dealing with and containing coronavirus. Got this narrowing pennant structure here, expecting sort of further pushes, squeezes to the north for AUD, and potentially returning back to those sort of pre-bear market levels that we saw sort of Jan, Feb, March time, similar to its cousins over in the New Zealand as well, of a narrowing pennant structure there, subject to potential decent breakout to the upside, with obviously a lot of room to further squeeze to the north. Just looking left of the chart there. So guys, that's everything that we're looking at for this week. Have a smashing one. Stay lit, baby. Let's get it.